personal finance space. He's a best-selling, award-winning personal finance author and speaker. His latest book, Transforming Payments into Prosperity, you can find it on Amazon. He's going to talk all about it. What's really interesting is we are going to talk about breaking free from the payment matrix, power of strategic banking for financial freedom, transforming payments into prosperity. These are concepts that just make your mind shift. So I'm really happy to have him on to discuss this and add value to the audience. So Tony, welcome.
Thank you, Doctor. Pleasure to be here.
Yeah.
Thanks for having me.
Yeah. Briefly introduce yourself, and I'm really excited to dive into your story and your concepts.
Okay. I've been in personal finance for about 30 years, and my devotion and passion about personal finance is deep because when I was a kid, 11 years old, we had a family meeting, and it was me, my dad, my mom, and my sister, but it wasn't to plan like a dinner, it wasn't to plan a vacation. It was where I was going to try and talk my father to coming back home. And I looked at him, I said, Dad, doesn't matter what you did. We love you. Doesn't matter what you haven't done. We still want you back home. And he was just, it was a very difficult time. And he got up and he walked out of the house and we were left on our own. And as I grew older, I was always wondering what was the deal with, because in the 70s, there were not that many single parent families. And I was probably, I think I was one of two guys I knew who didn't have a dad around. And so I was really curious to find out what was different about our situation. And while there was a lot of different things that were wrong, the thing that was a amplifier to everything else was the fact that my parents were under a lot of financial stress. And it's very common that financial stress never helps things get better. It just makes things worse. And having gone through that and lived it myself, my passion is to help families to avoid that type of situation where families have enough to face on their own as it is. The last thing they need to do is be sitting around a house or sitting around a kitchen table saying, I'm so glad we're swamped with everything that we've got going on. Our schedules are chaotic. And what makes everything better? This financial stress we're under. Nobody ever says that. So the passion I have is to help people turn the volume down on financial stress, to learn how the numbers work, to find out how things are stacked against them from the beginning without them even knowing, and just turn that volume down and turn on some light bulbs so people can walk through life financially with the prosperity they deserve.
Oh, so really great segue and introduction. And so what I always love is always love these kind of concepts that just make your brain just shift. And so what is this breaking free from the payment matrix? What is that?
The payment matrix is my perspective on the banking system most people are using and that the most people are a part of. What happens when you have your income? You get your paycheck, whatever, whether it's from your own business, wherever your income's coming from, goes into a checking account. And then from there, it gets deployed to make all your payments. And this is what the banks want you to do. They want you to use their accounts to pay your bills. And the reason that works really well for them is because there's two things people never really understand. One is that when you look at your debt payments, and because debt is proportional to debt to income ratios, things that you're probably familiar with, and when you look at how the payments are made, and when you realize that the interest rates you're being charged versus the actual volume of dollars in interest you pay are very far apart. In the last 12 years, working with people, probably over 1,000 individual households, myself personally, they're shocked to find out that every month when they make their payments, up to 50%, in some cases even more, of those dollars is interest. Even though they might have a 4% mortgage, they might have an 8% car loan, 15, 16% more percent on their credit cards, but 50% is what they're paying every month. And then when you think about how much you have to bring, how much you have to gross to bring home the amount that you're paying every year, that's almost 50% of your income. So the payment matrix is designed to make you think about just putting money through a budget so that you can pay your bills. And they make you believe that because you can pay your bills, it means you can afford them. But I don't know too many people who can afford to pay 50% interest and use 50% of their gross income to do that. And so that's what the payment matrix is. It's an illusion of prosperity. And all the while, you get to retirement, the average individual in this country, 92% of them will never be able to quit working comfortably because they have generated all this wealth, $2 to $3 million over their working lifetime, but it was all spent before they earned it. No one told them how the numbers worked. And by the time they get to retirement, it's too late. I like to look at retirement as a cliff everybody is heading for. And so the longer you wait to try to make the turn, the harder it's going to make to, you got to slam on the brakes. Hopefully the analog brakes are working and you're turning the steering wheel frantically. And it's just, to me, knowing that people are following just traditional things, thinking they're doing the right thing, it's unfair. And so I'm here to try to help people understand how the numbers work, how to turn the table on the numbers so they can begin working for them instead of against them, which is what the payment matrix makes, the environment it creates.
Yeah, there's so much to unpack and unravel there. And it was just, where I wrote a post about this where the system makes you dependent upon it. For example, our food system makes us unhealthy so that we are dependent upon the hospitals and insurance companies. And then they rip us off. And then,
Hmm.
the car auto industry, they build horrible roads so that we were forced to buy a car, and then we have to play these status games and see who's driving what kind of car, and it's polluting the environment, and just or the air, we're forced to travel by air when it's so inefficient, when we could have trains and high-speed trains. And same thing with banking, they want you to be in debt so that they become a lifetime customer. Which brings me to my next question: is you talk about transforming payments into prosperity, and you actually wrote a book on this. What is that about?
Here's the deal. We all know that we have payments to make. Nobody, or I shouldn't say nobody, but very few people can write a check to buy a car. They need a mortgage to get a house. So
Yeah.
payments are a part of the process. Trying to think that you can live without payments is a little bit difficult. There are people who do it, but they're few and far between. The challenge, though, is not the payments, but where they're going, who you're making payments to. And so what the book is about is showing people how to begin to change the direction of their cash flow. Because what's happening is cash is flowing in, it's flowing out. And because we're using this payment matrix system with checking accounts and debt that we have, it never comes back. So what we have discovered and what I've worked on over the last dozen years is a system that helps people redirect where the payments are going over time to the point where you become your own funding source. And you are, like, for instance, if you buy a car, you can buy a $30,000 car, make payments like you would normally, and make $2,600 on the loan, as
Wow.
opposed to letting the finance companies do that. So that's the difference. It's understanding that the payment matrix is sucking you dry, but you can get out of it. It takes a little while to do it, but as long as you have the plan and you have the knowledge, it's just pretty much a process that you follow and let the rest take care of itself.
Yeah. So describe to me how you could purchase a car and make payments and make 2,600 on that. That's very interesting. I just want
Sure.
to.
Sure. Okay. So it again, where are you borrowing the money from? In the book, I explain how you can create what we call a private family banking contract. And it's shocking to most people to figure out where the heck they heard how this is built. And I like to joke about how when it comes to life insurance, everybody is talk about a chorus of yawns, right? If you're sitting on a plane and somebody's chatty Cathy's next to you and she's talking and you want to have some silence, just say, hey, you know what? I sell life insurance, and she'll be quiet.
Yeah.
But the people don't understand life insurance. They buy it wrong. Everybody buys life insurance wrong because they ask themselves, what will my loved ones get when I die?
Hmm.
And they're thinking, I got to protect my family from loss of income. And they make the mistake of not realizing that in that equation, they're not the only ones trying to protect themselves against loss of income, because the insurance company doesn't just hand you the policy. They're like, okay, now that you've applied, now let's get you to see our doctors. Let's make sure we go through this underwriting process. I want to make sure that you're not going anywhere soon, at least with regard to natural causes. So when you ask yourself, how much will my loved ones get when I die? That's the wrong question. Because if you get the contract, the insurance company's concluded, you know what, there's going to be a lot of living between your first premium payment and that death benefit getting paid out. So the question I teach people to ask is, what will the contract do for you while you're alive? The answer to that question is buy cash value and bet with the insurance company. And so If you have a policy structured this way, in just a number of years, you're able to borrow money to buy your own car. And when you do that, in the example in the book, you buy a car, you're paying 5% interest to the insurance company. Your cash value is growing at about 4%. I get asked all the time, well, if I'm paying 5%, make it 4%, how am I not losing money?
Mm.
And the answer to that is it's not in the interest rates, but it's in the volume of interest dollars that are being earned versus the volume of interest dollars being paid. And as when you make a payment, you bring down the principal balance and you're only ever charged interest on the outstanding balance. The money sitting in your policy's cash value, it's earning interest on an increasing balance. So by about month 13, you're earning more interest than you're paying every month. And by the time you've paid, 5 years, you pay the car off, you've had a net profit of $2,600 and change. And you've got the car that you own, and it's better than paying cash. It's better than going to the finance company at the dealership because you're always in control.
Yeah, really interesting. What about this idea of the power of strategic banking for financial freedom? What is that?
That's when you realize how life insurance companies work. The banks and life insurance companies, they don't do what they tell us to do. They're doing something else. So we take a playbook out of their, or I should say, a page out of their playbook. And when the insurance company is going to spend its money, it's not going to buy death benefits, it's going to buy assets. And so what we do is we teach people how to use the right kind of policy with the right kind of company so that when you're putting money into the policy, you're building cash value from the very beginning. And as the cash value is accelerated with its growth, now you've got this amount of money that you can recycle. It's like your own personal line of credit. The difference is the money that's securing the line of credit is earning interest for your future. Most people, when they get to the retirement age, they are stressed out because they've used all of tomorrow's money today
Mm.
by using debt, and they've paid more interest than they ever thought they were going to. They didn't realize how much of their gross income, was being used to, pay debt payments. And here you're reversing what the banks are doing. You're saying, I'm going to be my own funding source. And that way the money continues working for me while I use it. I'm just going to be a really good banker during the process and pay myself back while I'm generating income. Because by the time I want to retire, maybe I might not want to make payments. And that's where the insurance companies' policies the way we structure them work. Because probably the most common question I get from my clients is, Tony, I'm going to take out this loan to pay off this credit card. What will my payment be? Because when was the last time you went to get a loan and you didn't know the payment before you signed? The insurance company doesn't care if you pay it back or not because they're guaranteed to get paid. They're going to secure the loan with your cash value. And if you don't make any payments, then at the end of the year, the anniversary date of your policy, you get a statement that says, hey, doctor, would you like to pay this interest that you've earned, that you were charged this past year? If not, we'll just tack it on to the back of the loan. And so we teach people how to manage that effectively so that they're always in a net positive result while they're generating this income so that they can, by the time they get out of, want to break out of the working cycle, they've got actual money there that can help support them during retirement.
Oh, yeah. Really interesting. And so a lot of entrepreneur, like people, because we've got a couple cohorts of audience listening to this. One is like this traditional, the doctor, lawyer, 401k, what you're describing, in kind of these insurance vehicles. And then we've got entrepreneurs and we've got investors like they go real estate, equities, these kind of, especially real estate businesses. We've got entrepreneurs and they're like, screw the 401k, all these, I'm going to create shares. I'm going to create equity in my company. That's the biggest ROI. So where does this fit into for people that are like, I don't trust insurance companies. I'm going to create my own prosperity. How do you address that?
Actually, as business owners, when you start a business and you go through the blood, sweat, and years of work to build a profit, what's your reward? More taxes, right? And 401ks, SEP plans, KEOs, all of those plans. The funny thing about those is they started in 1974 with the ERISA Act, the Employee Retirement Income Security Act. So employers are told, start these plans for your employees so that you can put money away. The question is, what did the companies use before the ERISA Act was passed? They use something called a defined benefit plan.
Yeah.
Once ERISA started, they took defined benefit and put it into defined contribution so
Yeah.
that the benefit was never described. One of the things I help entrepreneurs and business owners who have successful businesses, I help them put together a defined benefit plan where they can put more money away, save more on taxes from their, get a bigger tax break than the other plans are, because it's not an employee retirement income security program. It's a program for the employer. And you don't even have to have employees to put one together. And so it's again taking a page out of the playbook and saying, where should I put this money? And in this type of a plan, not only do you get the same tax savings as you would if your accountant says you need to buy a piece of equipment, so to bring your tax down.
Yeah.
Well, where's that piece of equipment going to be when you're 75? So get the same tax break, but use that money to create guaranteed lifetime income. So
Yeah.
when you retire, that's one thing about insurance companies is that they are really good about making money. So when you get with you're working with the right insurance company, which we always recommend mutual insurance companies because you're a part owner of the company, then they're making money for you because the
Yeah.
mutual insurance companies are owned by their policyholders. And
Mhm.
so as a business owner, maybe you don't have that profit right away.
Mhm.
So you start putting together one of these private family banking contracts because now you're going to recycle that cash. Instead of getting a line of credit from the bank, you're going to get a line of credit from your own revenue.
Mhm.
And so once you've done that, and now you're starting to build profit and things get better. Now, instead of putting together a 401k, put together a defined benefit plan, because even though you own, the company owns the revenue,
Mhm.
and we put together the LLCs and the S corps because we want to get the tax breaks. But then the question is, how do you transform that business wealth into personal wealth? And the way we do that is with a defined benefit plan that's more favorable to the employer, gives the employer more money they can put in to save more money on taxes and more
Yeah.
discretion with who they have to include in the plan. And then, like, I've helped people who already have existing 401ks. We do a plan where they wind up saving more money in taxes and they have guaranteed lifetime income, eight, nine, $10,000 a month for the rest of their lives. And so that's what we try to do. The IRS is always going to take their share. So we just try to work with what's on the table in different ways. And here it's going back to the past before the 401ks, because the 401ks, we all know what happened in 2008 and then with COVID. I don't know about you, but I don't want my retirement to be dependent on whether or not the market's feeling good today, or I don't want that to happen. I'm out of there.
Yeah. Yeah. And even real estate these days is very risky because you still have to sell yet, or you can borrow against it, but now you have to deal with hurricane, earthquake, fire, tornado, and then
Hmm.
you have to deal with tenant risk now. They have more rights than owners now. Concluding it, what's really interested is we also talked about this is you have to go outside of the traditional system to learn about financial freedom. And for some
Hmm.
reason, either I don't know, it's by design or whatnot, but what is the mindset shift for financial freedom? Like, how do people break free from these kind of obsolete ideas and really secure their financial futures?
I think the most important thing to think about, and it's chapter 2 of my book, is titled, Who Do You Think You Are? And what I'm trying to get people to understand is you are not, most folks were looking at their personal finances through what I call a budgeting lens. I got this much coming in, got this much going out. Oh man, I got something left over. Thank you, Jesus. I got something left over. And they think that's okay. And
Yeah.
that's exactly what the payment matrix wants you to think. Because what you're not aware of is what's happening inside of those debt payments you're making, how your 50% of your gross income is being used up to pay 50% interest every month.
Yeah.
And I tell people there's something called your lifetime value. You're going to work for decades, and you're going to generate the average individual $2 to $3 million. People who are in more white collar work, four, five, $6 million. So you are a millionaire in the making right now. The question is, why don't you feel like it? Because the banks in the payment matrix has you looking through your financial life through this budgeting lens. And so I tell people, take a step back and realize how much you're going to make throughout your lifetime. Instead of trying to take whatever's left over, this magical 10% they tell you to pay yourself first with, which is a joke because that book is almost 100 years old. The Richest Man in Babylon it was published in 1926, and that's where that 10% thing comes from. I don't know about you, but a lot of things have changed since then. And instead of taking that 10% and chasing these fictitious double-digit rates of return in the market that will hopefully generate enough income for you to replace 100% of your income
Yeah.
when you're just taking 10%, take the 10% and take that money to liberate the amount of money you're paying in debt payments every month. Because right now, you can't do anything about the past. It's like they ask, what's the best time to plant a tree? 20 years ago. What's the next best time? Today. What we do is we take and redirect that supposed pay yourself first, and we start paying ourselves last because we want to pay off everybody else. But the difference, though, with these policies that we write is you're able to pay off your debt and build tax-free wealth at the same time, because
Yeah.
the money that you're using to pay off your debt is still working inside your cash value. And in the book, I have an example of a sample family that I've used from all the research I've done over the years. And they get out of debt in 9 years and 3 months. And by the time they're out of debt, not only have they liberated $3,100 a month in cash flow, they've got $67,000 in their policy.
Mm. Wow.
So it's a both and instead of an either or.
Yeah. How can people find you and check out your work and check out your book and learn more from you?
If you go to Amazon, you can search on Transforming Payments into Prosperity, or you can go to, which one of us? I got to think about the website now. They've got so many of them. Prosperity.smartestwealth.com. And that will be where they can find information on the book itself. And if people are looking at saying they're listening, if you're listening and saying, what about this thing about defined benefit plans? I have a website called bossretirementplan.com that explains how that all works. So either one of those, you'll have my calendars in there. You have information for how to get in touch with me. And I work with people myself one-on-one, and I enjoy it because I love working with numbers and I love helping set people free.
Yeah, I love that. And thanks so much for a wonderful discussion and happy holidays and keep up the great work.
I appreciate it. Thank you so much for